Good afternoon. Welcome, everyone. I know it's a very tough shift, as Rahul was mentioning. It's post-lunch. It's always challenging, and to keep the audience engaged. But we want to keep it very dynamic, more conversation-oriented. Would love to get some insights from Rahul's journey of accelerating digital financial inclusion. Also, want to spend a couple of minutes to set the context for today's discussion, share a little bit about what we at the RBIH are doing. The Reserve Bank Innovation Hub, or RBIH, has been set up as the subsidiary of the Reserve Bank of India to accelerate innovation in the financial services space. One of the thread, of course, a core focus area has been for us to accelerate digital financial inclusion. And our mission is frictionless finance for 1 billion Indians. And we are doing this through various approaches. One, of course, is the ULI, or the Unified Lending Interface, that you might have learned about in the morning. And there is an initiative called the Fintech and Startups initiative that I currently lead. So the FAST initiative is more towards working with fintechs and partnering with banks and financial institutions to take some of these innovations forward. So given this context, as someone who comes from the role of perhaps an enabler to work with large financial institutions, fintechs, and see them actually solve for digital financial inclusion, I want to start off without further ado, Rahul. Your journey has been, for the last 5 to 6 years, you've disbursed nearly 1 million loans for what one might call as not necessarily the digital natives, but someone who's getting into the digital space through the process of financial inclusion. Would love to understand, the entire journey and the growth curve, how it has been, and some key learnings that you want to share with us along the way.
Good afternoon, everyone, and thank you, Aakarsh. We did have a proud moment a couple of months back when we achieved over 1 million loans in disbursals. And these are all loans that are given to low-income households across 27 states, over 20,000 locations, and 92% of our customers are women, and about 26% of our total disbursals have been to first to formal credit customers, and another 25-26% to customers who are considered high risk because they may have tarnished their credit bureau scores from some past defaults, which we established were not willful, but they were victims of circumstance. So that's kind of the whole spirit of financial inclusion. And you made a very good point that we're trying to create a digital-first model for a cohort of customers where 5 years back, maybe only 30% of them had smartphones, but now we see at a household level, at least about 70% have a smartphone.
So just want to plug in here from the digital financial inclusion perspective. What do you think has been the role of DPIs, or the digital public infrastructure, in accelerating this inclusion? Has it really helped you in that journey? Even today, from your motto of paperless and cashless and so on. So how far have you come in terms of that journey? How has DPI enabled that revolution? And what is the way forward?
Sure. So I think a business model like Avanti, which was a step to really seeing if asset-light, capital-efficient platforms that are required in India to accelerate the next generation of financial inclusion. So Avanti itself was a very bold experiment. So I think against our lofty dreams of trying to play a part in that market where there are about 100 million underserved or unserved households, I think the first credible step has been to get to the 1 million. Models like ours would not have been possible without DPI, because today when we say that we are paperless, we truly have been from our first loan onwards, where our customers are onboarded onto the Avanti digital app in an assisted mode through partners that we have across the country. So there is a human who onboards the customers, because our customers don't have the ability to self-serve yet. They will soon. And then the process kicks off. And internally, end-to-end, everything is pretty much digital. And then the disbursal, of course, is directly to the bank account. Then the credit underwriting is a combination of internal algorithms plus the social trust signals that we receive from our partners, agents who onboard the customers, which is very important because a large part of our customers are data dark. So the social trust signals are very important. DPI, of course, has played a very, very key part. And now, with the sort of ubiquitousness of UPI, etc., on the payment side, we're seeing a fillip in terms of digital repayments as well. So we're in a segment where digital repayments used to be very small. We're now seeing that number go to almost about 40%. And it's not as good as where we would like it to be. Our North Star is 100%, but I think that's a multi-year journey. So we're making progress, and it just shows also the nature of evolving India and the fact that if you cater to fundamental cultural shifts, give adequate, responsible tools to our users, people imbibe technology.
I think that's a fantastic point. I mean, just want to understand you mentioned about some alternate signals. While there is financial information, transactional information, behavioral insights that you can get. So one of the key aspects largely in the unsecured lending space has been how do we look at alternate data to underwrite credit for, say, new to credit customers. So let us say from the persona of a nano entrepreneur, micro women entrepreneur, what would be some of those signals that you would usually look at and underwrite when it comes to these small scale businesses?
So your question kind of covers multiple segments, but if you look at the majority of our customer base, out of the million loans that we've given, over 85% or 80% of that is customers which are kind of in the microfinance category. And they all are micro entrepreneurs because they are all essentially smallholder families. So for many decades in this space, financial inclusion, one has actually relied on the self-declared income. And then you've relied on your proximity built with and relationships built with the customers through a field force and collections to do that. We took a different approach. Our approach was we didn't want to build an asset-heavy brick and mortar business because we said there are enough and more organizations which have very deep community connects. And our role comes in to kind of build something on top of that, build very structured risk management, be aggregators of capital and have a deep tech platform that allows for flexibility in terms of loan products, etc., to the users. So coming back to your specific question on how do you underwrite a customer, I think one is, of course, there is some heft that is considered in terms of the self-declaration. There are some customers so let's look at the easy kind of customers where there is a bureau data available. And that you kind of juxtapose with the self-declared incomes plus the local knowledge that our partner has, and it's kind of a easier process of decision making. Then you have customers who are entirely new to credit or entirely new to formal credit, and that's where they could be very data dark. And that's where a combination of their own self-declaration, asking questions that validate what they're saying, building income imputation models based on their assets that they declare and we verify, and seeing some of the digital footprints that they may be leaving and picking up signals from there. So it's a combination of these things by which we underwrite.
So, while I understand that there's a lot of, I would say, science and understanding and psychometry behind underwriting, I'm just only curious to understand if AI coming into the picture, do you see that easing the process? Is it in terms of the way underwriting is currently being done? Is it going to be an enabler? Any changes that you foresee as a result of this?
See, I think at this stage, I must say, I'm one of those guys who doesn't want to over exaggerate the case of AI. And especially to the underserved and unserved segments in rural India that we're looking at. We already use elements of AI, right? As we grow, the LLMs, etc., will gain further traction. But what is most valuable also is what the customers declare themselves. And how you then code it onto your platform is a different. You see patterns, etc., and you begin to code it. You also have our originator, which is a responsible entity working in the locations where our customers are based. They fill the trust element of going to a digital platform, but through somebody who is known to them in the community. And they share information there. So I think it's a combination of alternate AI, ML, which will evolve. My view personally, and this is that in India, if you really want to make AI population scale, it is going to be the voice-enabled examples where that will be the true democratization of AI.
Fantastic.
So I think it's not just about using AI for underwriting, but it's going to be more about in the fulfillment processes.
Fantastic. So now that we've spoken about underwriting, I want to go to the other end of the spectrum, which is more on the collection side. I think what is very interesting is while you're using digital channels for repayment, etc., there's also a very good presence of a field force that is constantly in touch with the borrowers. So how do you see, I mean, what are some of the innovations, key learnings that you've had when it comes to collections, repayment, etc.?
So, I'm going to be a little provocative here. Let's look at any one of us in this room. We have credit cards, we may have loans for automobiles, we may have a home loan, etc. Does anybody come to collect on us? That stopped many, many years back, right? As long as we have steady jobs and we have enough cash flows, the multiple EMIs or repayment responsibilities we have kind of get taken care of. So therefore, why is it that in a segment which typically has low delinquencies, effort is expended on physically going and collecting from 100% of the customers? That has to change for multiple reasons. One is today the same users are using mobile phones to order from e-commerce sites, even food delivery, etc. And then you have to do some cool things like we've done where we have, in order to take out this whole insecurity on OTP sharing, etc., we have like QR codes that we send, which are facial images of the person. So the person is seeing the personalized, facial image on the QR code that we send to them for collecting. Every time you're collecting, that means there is a person involved. You're adding on to the cost which the user bears. The more cash there is in the system, the more is the cost of carrying cash, the safety issues of carrying cost, the insurance costs associated with cash handling, and the temptation to do something with that cash once you've collected it from the user, where there are some bad actors in play. So if you really want to build agency for customers, if they are now comfortable in being onboarded on a digital app, maybe in an assisted mode, if they all have bank accounts and the money goes directly there anyway, then why should the next frontier to be solved for be 100% digital repayments? Now that's our North Star. So when we started out with our business 6 years back, paperless from day one, over 1 million loans done that way. So we have a strong proof of concept. Presence-less, that we will not build an asset-heavy model, that there are enough community networks we can partner with who originate, service, and collect. That also has been done. And as I said, cashless is a journey. It's tougher. It's, you know, a lot of people need to have smartphones at an individual level. What we see practical issues, people may have it at a home level. There is a trust in giving money there versus somebody they know comes doorstep service and there is a human being they've trusted who they hand over cash to. But that's kind of changing, because today what we've also seen in the last 6 to 9 months, when the industry has gone through a big challenge in the microfinance segment, is those field officers who also collect, gone are the days when they want to live in the branches and dorms, etc. They want to do their work, go home to their families as they should. So it's a time to empower them also by creating a culture and an ecosystem where people learn to repay back digitally. So this spending 100%, spending effort on 100% of customers to go and physically collect, that's got to go. Yeah.
So I want to spend a couple of minutes zooming into the paperless aspect that you mentioned. Couple of, I would say, innovations or projects that we undertook at the RBIH pertain to creating a digital trail for some underserved customer segments, and also making the process entirely digital. Just want to take the anecdote of the Kisan credit card that some of you might have heard of. Think of it as a working capital or a credit line for farmers to purchase some of their, let's say, fertilizers, etc. But earlier, that process was being done manually, with requiring at least 4 to 6 visits to the branch for a farmer, which meant loss of wages, as well as taking 4 to 6 weeks in terms of the entire process being completed and the amount actually getting into the account of the farmer. So our team went on the field, tried to understand all the, let's say, number of questions that are asked in a paper form, and shortened it significantly to make the process entirely digital. And also through this, I would say, project was where the ULI was born, where we were able to integrate land record data such that now a farmer walking into a bank is able to just share their land record number and is now able to get a loan in a matter of minutes. And this is done entirely digitally. And this has been possible also because of the paperless trail, etc., that we have created. And it's now something that is being done at scale for different customer segments through the ULI as well. Just want to spend another minute on the digital end-to-end digital SHG project that we took up. And it's very interesting that through the Swanari Tech Sprint that we partnered with IMA Ventures, that we did this, where we identified solutions to onboard SHGs digitally. Earlier, bookkeeping was done physically in pen and paper kind of a model. The entire process was digitized. Onboarding of SHGs is done digitally. So because of this entire process, now each individual member of the SHG is able to have a credit trail, in terms of not necessarily looking at the SHG as a whole when it comes to assessing the credit score, but each individual member is now able to establish a credit history. So these are some of the, I would say, innovations or projects that RBIH has done by actually going out on the field and creating an end-to-end digital straight-through process and easing the entire lending journey.